Hello friends, if you like to open Demat account, you can make use of the link available in description. In this video, I had discussed about fundamental analysis. Till now in this channel, I had uploaded totally 8 videos in the concept of basics of stock market. These 8 videos will be most useful for understanding basic terms in share market so that it will be very easy for you to do investing or trading. In this fundamental analysis series, I had prepared totally 10 videos. By watching these 10 videos, you will get a complete idea about fundamental analysis so that you yourself can do fundamental analysis and you can find good shares for investing. Please watch all these videos one by one so that you can easily understand the concept. All the videos link are in description. In this fundamental analysis, there are two types. First is qualitative analysis, second quantitative analysis. In qualitative analysis, we are least bothered about the financial statement of any company. Instead, we are going to check the company's objective, management strategy and how long they will be honest with the investors. In simple, if I want to explain means, any company's management should be more efficient in their business. At the same time, they should be more honest with the investors also. In this qualitative analysis, we are going to check the efficiency as well as honesty. Next, in quantitative analysis, there are three types. First is company analysis, second industry analysis, third is economy analysis. Some people used to think that for doing quantitative analysis, big knowledge is needed about accounting like that. But that is not true. For doing quantitative analysis, you should know some basic financial terms. That is enough. All the data will be given ready-madely in some of the websites like Money Control. Using that, we can easily do the analysis. In India, there are many varieties of industries are available. For example, steel industry, refineries, agriculture, pharma industry. Like this, many industries are available. In that, if I take a steel industry, under that there are many companies are listed in stock exchange. For example, Tata Steel, JSW Steel, Jindal Steel. Like this, many companies were listed in stock exchange. In this, one company will be a competitor to the other company. So, select the best performing company and in that company invest your money. Next, we should know how to do the analysis about Indian economy and government policies. Because Indian economy and government policy will have high impact in the growth of specific industries. So, we should know how to analyze the Indian economy and government policies also. All the people will like to invest their money in a efficient company only. For finding that efficient company, we need to do company analysis. For that, we should analyze the company's balance sheet, profit and loss account and cash flow statement. In this company analysis, we have to analyze 8 major parameters. Based on that 8 major parameters, we can easily find out the best company. Next, industry analysis. In industry analysis, we should analyze the present government policies also. Based on the present government policies, what are the industries will get benefit like that, we have to analyze. For example, present BJP government tells own house for all citizens, electricity for all houses. Other than that, they support for battery vehicles. Like this, every government will have separate policies. Based on that policies, which are the industries will get benefit, like that we have to analyze. Other than this, for some of the industries, we should give special importance for some of the parameters like banking industry, FMCG product industry. For these industries, we should give special importance for particular parameters. In industry analysis, we are going to discuss about all those parameters also. In India, if every citizen's income increases, then product movement will be good in the market. This will support the growth of industries. Because of this, Indian economy will have growth and share market also will have positive impact. This is the analysis we are going to do in economy analysis. For doing economy analysis, we should know some of the parameters like country's GDP, inflation, exports and imports. One more major parameter we are going to discuss in economy analysis is monsoon. because backbone of our country's economy is agriculture. So if monsoon is good, then agriculture will be good, then Indian economy also will get growth. These are the parameters we are going to discuss in this economy analysis. In the first and second video, I had discussed all the basic financial terms used in fundamental analysis. These terms will be more helpful for analysis part. In the third, fourth, fifth and sixth videos, I had discussed the 8 major parameters which are used for screening the good company stocks. With the help of 8 parameters, we can easily find out the good shares. From that good shares, how much percentage returns we will get in the future. That valuation I had made in the 7th video. In simple, I had discussed stock valuation method. In the 8th video, I had discussed industry analysis. In the 9th video, I had discussed economy analysis. And finally, in the 10th video, I had discussed how to do qualitative analysis. We are going to discuss the first financial term, that is top line and bottom line of a company. A company's revenue by the sales of product or by providing the services, that is called as top line of the company. From the revenue, if you deduct the total expenses of that company, then we will get the final profit. That final profit is called as bottom line of the company. Here, total expenses includes raw material cost, manufacturing cost, equipment's depreciation value, loan interest and tax. For example, let me take one two-wheeler company. Let me assume that that company had sold totally 10 bikes in this financial year. Let me assume that cost of one bike is 1 lakh rupees. Then that company's total revenue will be 10 lakh rupees. Because they had sold 10 bikes, one bike price is 1 lakh rupees. So that company's total revenue will be 10 lakhs. This is called as top line of the company. Let me assume that that company's total expenses excluding tax as 6 lakh rupees. If I deduct the expenses 6 lakh rupees from the company's revenue, then I will get the profit of that company as 4 lakh rupees. This profit is known as profit before tax, or we can tell this profit as the company's taxable income. In India, all the companies has to pay 30% tax to the government. For 4 lakh rupees, 30% means I will get 1.2 lakh rupees. That company has to pay 1.2 lakh rupees as tax. After paying tax, the company's profit after tax is 2.8 lakh rupees. This is called as bottom line of the company. Practically, if that company tells they had sold 10 bikes and so that their revenue is 10 lakh rupees. From this, we should not conclude that that company have cash 10 lakh rupees in their hand like that. Because they might have sold on credit basis also. We can take the previous example in another way. Let me assume that that company have sold 8 bikes after receiving cash. So that that company will have 8 lakh rupees as cash in their hand. Let me assume that that company had sold remaining 2 bikes on the credit basis like that. Credit basis means for that 2 bikes, customer will pay the amount later. Maybe after 1 year or after 2 years also. So, for that company, 2 lakh rupees will be receivable cash. Total expenses excluding tax for that company will not change. That is same 6 lakh rupees only. In hand, 8 lakh rupees is available. From that 8 lakh rupees, if I deduct 6 lakhs, I will get 2 lakh rupees. This 2 lakhs will be the balance cash available with that company after deducting total expenses excluding tax. With that company, only 2 lakh rupees is available as cash in the hand. So that the government will not accept if the company pay tax only for that 2 lakh rupees alone. For the government, that company's total revenue from both cash based and credit based will be 10 lakh rupees. In that 10 lakh rupees, expense 6 lakh rupees deducted means remaining 4 lakhs will be coming. For that 4 lakh rupees, that company has to pay tax compulsorily. For 4 lakhs, 30% tax means 1.2 lakh rupees that company has to pay as tax. From 4 lakhs, 1.2 lakh rupees deducted means remaining 2.8 lakh rupees will come. that 2.8 lakh rupees will be considered as that company's profit after tax. But in that 2.8 lakh rupees, only 80,000 rupees will be available with that company as a cash in their hand, and remaining 2 lakh rupees will be cash receivable from the customer. Some of the companies may show more revenue and more profit in their statement, but they will not have sufficient fund for their day-to-day operating expense even. The reason will be they would have done more and more credit-based sales. Like this, if a company do more and more credit-based sales, then that company's liquidity will decrease, and so that in future that company may face a big loss. Next, in financial statement of any company, very important statements we have to analyze is balance sheet and profit and loss account statement. In the balance sheet, a company, what are the assets they have and what are the liabilities they have. These two data will be recorded in the balance sheet from the starting date of the business to till date. In simple, if I want to tell means, if you see the balance sheet of any company, then you can easily understand the status of their business from starting date to till date. If any company purchase land, building, machineries, equipment, furniture, all those will come under assets. That company's bank balance also will come under assets only. If a company take any loan, that will come under liabilities. If a company purchase raw materials or machineries in credit basis, then that payable amount also will be added to liabilities only. In India, one financial year means from 1st April to 31st March. All the listed companies will declare their annual report at every financial year end. In the annual report, balance sheet will be mentioned like this. Balance sheet as on 31st March 2020. That means this balance sheet record is maintained from starting date of the business to till 31st March 2020 like that. Next we are going to see about profit and loss account. Profit and loss account means in one financial year a company how much expenses they had done for their day-to-day operations of their business and how much income they had earned from their business. All those will be recorded in their profit and loss account. In simple, if I want to explain means, a company's 1 year financial performance can be understood by their profit and loss account statement. In annual report, profit and loss account statement will be mentioned like this. Profit and loss account for the year ended 31st March 2020 like this. That means the profit and loss of that company in financial year 2019 to 2020 is recorded in this account. That is the meaning for that. The expenses of a company were categorized into two types. First is capital expense, second is revenue expense or operating expense. Let me assume that a company is spending money to buy a product or they are getting a service like that. If the benefit of that product or service goes beyond that financial year, then that expense will come under capital expense. If the benefit of that product or service getting exhausted within this financial year, then that will come under revenue expense. For example, let me assume that I was running a hotel like that. For that hotel, if I purchase land, building, AC, bed, table chair, kitchen items, these things will come under capital expense because these items will support my business for long period of time. Addition to this, if I had purchased a brand name to use for my hotel for the period of 10 years, then this license also will come under capital expense only. Next, for running my business, daily I has to purchase vegetables and other than that, monthly salary for the workers, electricity bill, water bill, all these expenses will come under revenue expense. Because electricity bill is not a one-time settlement. Every month I has to pay electricity bill. Similarly, daily I has to buy fresh vegetables. Like this, which are all the items does not support my business for long period. That will come under revenue expense. In my hotel, if I install one lift, that will come under capital expense. But if I do any repair work for that lift, that will come under revenue expense. Whatever items we have seen in capital expense, that will be recorded in balance sheet because all those items will come under asset category. Similarly, revenue expense will be recorded in profit and loss account because whatever items we have seen in revenue expense will support the day-to-day operation of the business, does not come under asset category. Next, we are going to see about cash flow statement. For a company, how much cash inflow happens and how much cash outflow happens. All those data will be recorded in cash flow statement. Normally, if a person apply for personal loan, then that bank will ask for 6-month bank statement. Because one person can prepare a fake salary slip, but in bank statement only actual entry will be recorded, so that bank will give importance for bank statement. Similarly, in balance sheet or profit and loss account, there is a chance that the company may adjust some of the data. For example, in some of the companies, they may show more sales than the actual sales. Like this, they may show more profit than the actual profit. But in cash flow statement, what are the actual transactions happened? That only will be recorded. So, some of the investors give more importance for this cash flow statement. In every financial year end, all the listed companies will release the annual report. In that annual report, all the informations about that company will be mentioned. What are the new projects they are going to start? What was their financial performance? Like this, all those data will be mentioned. Mainly, for doing company analysis, we have to check the financial statement of the company. In that, balance sheet, profit and loss account statement, cash flow statement, these three are very important statements. Downloading all the company's annual report and analyzing all those annual reports will be a tedious job because all the company's annual report will have around 500 pages. So, instead of downloading all the annual report, you can easily do the analysis in website like Money Control because all the company's data will be available in that website so that you can do the analysis very easily. After doing complete analysis, if you had shortlisted 4 or 5 good shares, then that time you can download that company's annual report and you can do some more analysis before investing. In every company's annual report, 2 types of statements will be available. That is, first standalone financial statement, second is consolidated financial statement. What is the difference between standalone and consolidated? We will see now. For example, we can take TATA Group. TATA Group have many varieties of companies. In that, some of them will be their own companies, some of them will be their subsidiary or associate companies. For example, Tata Steel, TCS, Tata Tea, these are the own companies of TATA Group. Because either TATA Group might have started these companies or TATA Group might have purchased the complete setup of these companies from some other person. That is the meaning for the own companies. These Tata Group companies have many branches throughout the world. In these companies, Tata Group have the full decision making authority. Just for example, let me assume that only these 3 companies are the own companies of Tata Group. That is, the own companies of Tata Group were only Tata Steel, TCS and Tata Tea. Let me assume that profit of these companies from Indian branches as 1000 rupees and profit of these companies from foreign branches as 2000 rupees. In standalone financial statement, Tata Group's profit will be calculated like this. That is, from Indian branches 1000 rupees plus from foreign branches 2000 rupees. Total profit will be 3000 rupees. This 3000 rupees will be mentioned as a profit in standalone financial statement of Tata Group. In simple, standalone financial statement means it is a total financial statement of all the Tata Group's own companies throughout the world. Next, we are going to see about consolidated financial statement. Other than the own companies of Tata Group, they have done many investment in other companies also. For example, we can take Tata Coffee. Tata Coffee company was not initially started in this name, and this company was started by some other person. That owner likes to improve his coffee business and he likes to open many branches throughout the world, but he doesn't have sufficient fund. By that time, Tata Group had came forward to invest in this coffee business. Tata Group had purchased 60% shares of that owner, and the name of the product also changed as Tata Coffee. Now, Tata Group had become a major shareholder in Tata Coffee, and so that now Tata Coffee had become a subsidiary company for Tata Group. Suppose company A had purchased more than 50% shares of company B, then company B will act as a subsidiary company for company A. Here, company A will have the higher influence on company B. Next, suppose company A had purchased 20 to 50% shares of company B, then company B will become a associate company of company A. Here, company A will have voting power and less influence on company B. Suppose company A purchase less than 20% shares of company B, then company A will be just an investor in company B. That's all. Here, company A will not have any decision making power. So that Tata Coffee will act as a subsidiary company of Tata Group. Similarly, let me assume that Tata Group had purchased 40% shares of JLR. So, JLR will become associate company of Tata Group. Like subsidiary companies and associate companies, there is another one term called joint venture. Joint venture means if two companies combinedly do a single project, then that is called as joint venture. In this joint venture, both the companies' shareholding may be 50-50% or 49-51% even. But here, both the companies will have equal decision making power. AirAsia Company, that is the joint venture of Tata Group and Malaysian Airlines. In AirAsia, Tata Group have 51% shares and Malaysian Airlines have 49% shares. Let me assume that total profit of Tata Coffee as 1000 rupees. So, in that 1000 rupees, Tata Group will get 600 rupees because Tata Group have 60% shares of Tata Coffee. Similarly, let me assume that total profit of JLR as 1000 rupees. So, in that 1000 rupees, Tata Group will get 400 rupees because Tata Group have 40% shares of JLR. Similarly, let me assume that total profit of AirAsia as 1000 rupees. Then Tata Group will get rupees 510 and Malaysian Airlines will get rupees 490. For the consolidated financial statement, all the companies will be considered. Not only the own companies of Tata Group, but also subsidiary companies, associate companies and joint venture, all these companies' statement will be considered. Now, in the consolidated financial statement, if I calculate the profit means Tata Group own company's profit 3000 rupees plus profit from Tata Coffee 600 rupees plus profit from JLR 400 rupees plus profit from AirAsia is 510 rupees. Totally 4510 rupees profit for Tata Group. Consolidated profit for Tata Group is 4510 rupees, but standalone profit is only 3000 rupees. Only for the easy understanding of standalone and consolidated financial statement, I had made this profit calculation. The companies which have subsidiary companies and associate companies, they will declare separately standalone balance sheet and consolidated balance sheet. Similarly, they will declare separately the standalone profit and loss account statement and consolidated profit and loss account statement. Finally, in this video, we will see about two types of business. Major two types were, first family owned business, second is professionally managed business. By the name itself, we can easily understand the family owned business. Here, if the father had started the business, then son will take care of that business. That is a family owned business. But in a professionally managed business, one professional will run the company. He is not the owner of that company, just an employee of that company. In this type of company, there will not be any promoter. If you take Reliance Industries Limited, it is a family owned business because it was started by Dhirubhai Ambani. Now the promoter is Mukesh Ambani. In Reliance Industries, all the important decisions will be taken by Mukesh Ambani only. But if you take L&T Limited, this was a professionally managed business. In L&T Limited, you cannot find any promoter. An efficient employee of L&T Limited can reach the topmost director position and he will manage that company. In some of the companies, some directors will be selected by voting system also. In this slide, you can see the shareholding pattern of Reliance Industries Limited. In this, promoter holding is more than 50%. So, this is one of the positive sign for that company. In this slide, you are seeing the shareholding pattern of L&T Limited. In L&T Limited, there is no promoter. So, promoter holding is 0%. In professionally managed business, if the promoter holding is 0% means there is no problem in that. Either in family owned business or in professionally managed business, you mainly check the efficiency of management head. In any type of business, if management head is more efficient, then he can convert a poor company into more successful. If you have any doubt in this video, please make a comment, I will reply.